So Tesla stock implodes nearly 10% in a day. Elon says they're cutting staff by 10%, and Ford adds about 6,000 new jobs to build EV. This is it, guys. The downfall of Tesla. It's done. You guys were right. You know what? I was wrong. You guys are right. Going all in with a workout, man. It's ridiculous. Okay, that was an over-exaggeration, but you guys probably feel like that. Or probably like that. But let's quickly go over some facts and not get sucked into what the media wants us to know. And as well as if you guys are actually panicking and losing your bananas because of what happened on Friday, in this video we're going to go over the 2030 stock price prediction video to give you a broader picture of, you know, what is going on right now and the opportunity that is showing itself right now. So stay tuned for that. But first, don't forget to smash that like button and subscribe if you haven't already. Let's go. All right, let's look at some facts. Elon mentioned on Friday that they're going to be cutting 10% of employees, but not just any kind of employees. He made it clear that the layoffs are salary employees and not hourly employees. Pretty much letting go or laying off those employees that's sitting behind a desk. And prior to this announcement on Friday, on Thursday and Wednesday, I think it was on Thursday, he mentioned that every single employee must be in the office 40 hours per week. And none of that home from work stuff. And then he follows up with this announcement. So I think there's something going on internally that Elon doesn't like. Aside from the super bad economy feeling that he's feeling, but other than that, he wants to trim off the fat. Now, what everybody thought about this announcement is that, oh my God, 10% of staff is going to be laid off. That means there's no demand. No one wants to buy Tesla vehicles anymore. Tesla's gonna go bankrupt. Oh my God, I'm gonna go broke. Well, not really. He in fact said they're still hiring for hourly workers. What this means is that they're still hiring for people to build the cars, to build the solar panels, to make the batteries, because demand is sky high. I mean, it's crazy how crazy demand is. It's absolutely crazy. If you want to buy a Model Y or a Model 3, you have to wait until literally in 2023, 6 to 8 months from now, and that's just crazy. So they're still hiring these types of employees. They're just getting rid of the people who are lazy and don't want to do the work, and they want to work from home from a different state, which Elon doesn't really like. And to be quite honest with you, looking at this at a long-term scope, it's actually a very good idea. And hey man, they just built 2 massive gigafactories. They're gonna stop hiring 10%, like not hire for that? I mean, come on. 2 huge gigafactories, and they need manpower to build the cars, batteries, and solar panels. So I can't stress this enough. It's not the guys who are building the EVs, the product, that's important. It's the guys who are lazy and don't want to work or don't want to come into work or fulfill their 40-hour work week. That's who it's for. Again, trimming off the fat. And that, by the way, cancels the argument of Ford adding jobs to build EVs and Tesla isn't. It's absolutely rubbish information, a big misinformation by the media. So don't buy that. So that's briefly going over of what happened and what he meant, that everyone's going berserk and bananas, everyone's selling out. It's just absolutely nonsense. But enough of that because we cleared the air. Let's go and see what the 2030 stock price prediction is going to be. All right, let's go. Don't forget to like. First, we're going to look at the bear case and then the bull case. So if you guys have been watching me for some time, you guys already know this chart is pretty much my simplified, oversimplified 2030 stock price prediction chart. But if you're a first time viewer of this channel, well, welcome to the channel and don't forget to subscribe. But I'll briefly go over it so you guys are up to speed. So here we got vehicles in the thousands. Then we got the FSD price one time. Now the reason why I picked a one-time fee rather than looking at it as subscription based is because we don't have that data yet. But as soon as that data comes out, we're definitely going to be using that because that's more reliable. But what I want to point out here is that in 2020, the FSD one-time fee price was at $8,000. Then they increased it to $10,000. Then in 2022, they increased it to $12,000. At the moment, it's $12,000 if you want to pay it one-time go for the FSD. So it's safe to say that every single year, they're going to increase the price by 2,000s. They did it in 2020, in 2021, and in 2022. So by 2030, the one-time fee for FSD should be around $28,000, which is absolutely sheesh, 28 grand just for FSD. But this is a software that does appreciate in value year over year, especially if robotaxi becomes a reality. 28,000 is gonna look like a bargain because the money you can make out of it, you can make your return of investment in a year by 2030 if robotaxi becomes an actual thing. But that's for a whole different video. Then we got vehicles with FSD. In 2021, there was about 150,000 vehicles with FSD, with about 936,000 vehicles sold, brand new. That brings the percentage to around 16%, but we reduced it down to 15% for the entire year up until 2030. Now, this number is extremely conservative, and because we don't have a set get solid data of how many robo-taxis are going to be every single vehicle sold due to high demand and growth of it right now. I mean, Elon said, or Tesla said, that this year they're gonna be about 1 million FSD beta drivers. So that's like, I didn't even predict for it. You know what I mean? Because it's that much high of a difference. But because there's no solid data, we're just gonna keep it extremely conservative and say 15% all the way to 2030. Although it may be close to maybe 50-60%, but keeping it close and conservative to 15%. Then we got total FSD sales. Then we got the FSD profit margin, which in 2022 is about 48%, but every single year is going to be 2% on top of that. So by 2030, it'll be 62% profit margin just from FSD, which is just absolutely nuts, just pure profit. Then we got the total revenue that adds the FSD total sales and the vehicle price sold per unit. Now, sold per unit until 2025, I put an average of 50,000, and then from 2025 all the way to 2030, I reduced it to 40,000 per vehicle on the average, because they are going to come out with new different vehicles, new different models. If they do come out with a van, if they do come out with like the 25,000 vehicle car, if they want to scale that high, they need to bring these prices lower or bring a car that's like in the 20,000 to 25,000 range, because it should be affordable for anyone to buy. 60,000 for a vehicle is quite pricey. I don't think they can reach 20 million vehicles per 2030 to by 2030 with a vehicle that's like $50,000-$60,000. They need to bring the price down to half of that, even less. So that's why I reduced the average to 40,000, because you got the semi truck coming, you got the Cybertruck coming, and then you have the Model S and the X, 3 and Y, and then you probably have the van coming, and then you probably have the 25,000 vehicle car coming, the cheap one, affordable one, not the cheap one, but yeah, you guys get my point. And for the total net income, what I did was that for the vehicle, right now the profit margin is around 25 to 30%. But for 2022, I left it at 15%, and then 18% in 2023, 20% in 2024, 23% in 2025, and from 2026 to 2030, I kept it all at 25%, keeping things conservative. And for the shares outstanding, what I did was that every single year until 2030, they're gonna dilute 4%. But most likely, they won't dilute 4%. They'll actually do more buybacks, and there are rumors about them doing buybacks, but this is also keeping things conservative. Most likely, by 2030, we will not see 1.47 billion in shares outstanding. It'll be far less than that. The EPS, well, it's blank right now. As soon as we put in the numbers, we'll see what's going on. And for the PE, well, we will both figure that out together once it's ready to figure out the stock price. As you guys can see, this is only the Tesla vehicles sold and the FSD. There is no Tesla insurance, Tesla solar, Tesla bot, Tesla robotaxi, and any other products that they are doing, obviously, that would have an impact here, but these are the chunk of Tesla at the moment. In the next 5 years, it could be robotaxis, but we don't have that data yet. But just going based on the base, let's go. So let's start off with 2022. We know that in Q2, it's going to be very ugly. It's going to be very bad. If you guys haven't checked out this video, if it's time to buy, you will see what Q2 is going to be. But there will be an updated video of that in the next week or so. But we know that Q2 is going to be very bad. But we also know that Q3 and Q4 is going to be monstrous. How monstrous? Pretty monstrous, because we are assuming there's not going to be any more restrictions in the Shanghai factory. Austin and Berlin is going to ramp up even more. So it's going to be a monstrous Q3 and Q4. So we can expect that. Now in 2022, I put 1.4 million vehicles sold. It would have easily been 1.5 million if the Shanghai factory didn't, get shut down because of COVID. But due to that, I'm going to put it at 1.4 million. Anything below that, man, it's just going to be ouch. But the years after that is going to be very juicy. And then from there, from 2023 to 2024, I increased it by 50% year-over-year growth in terms of vehicles sold, and then 40% for the years of 2025, 2026, and 2027, and then 30% growth for 2028 and 2029, and then 20% growth up until 2030. Look at this. In the bearish case, 17.5 million vehicles sold by 2030. So that's being bearish in my opinion. So by 2030, total revenue is going to be $775 billion, with the net income being almost $250 billion, which is just absolutely nuts. But you know what else is going to be nuts? The stock price. Let's get down to the stock price, but first, smash that like button, man. Why haven't you smashed that like button yet? Come on, man. So for the bear case in 2022, I'm gonna put a PE of 100. Now right now the PE is around 90, 85, around there, and the PE might go lower in the short term because of all the macro environments and Q2 delivery is gonna come out and everything. So it's gonna be pretty ugly ride in the next couple months, but a great buying opportunity. But anyways, I'm gonna say 100 PE by 2022, by end of the year, or even the first couple months of 2023, because that's when the results of quarter 4 of 2022 comes out, finishing a full fiscal year of 2022 in January of 2023. So around that time, I'm gonna say a PE of 100, and we get a stock price of $1,125 per share. So given where the stock price is right now, around 700, that's like literally a 50% return by end of the year if you just buy now with 100 PE. But that's if they do 1.4 million vehicles sold, and I highly believe that that's exactly what they're going to be doing. Now this is on the average, by the way. 1125 is on the average. It could go higher to maybe 1200, maybe 1238, or maybe in the 1000. It could reach 1000, but I'm going to say an average of 1125. In 2023, I set a PE of 90, which would give us a stock price of 1764, almost a 2 trillion valuation mark. In 2024, I gave it a PE of 80, which would give us a stock price of 2543, almost a 3 trillion market cap, which is crazy. Literally a 4x from now until 2024, which is just that's insane. In 2025, with a PE of 70, we get almost $2,900 per share. In 2026, with a PE of 60, we get 36 and 46 bucks per share. Geez, a lot of sixes in 2026, with a market cap of 4.5 trillion, which is just crazy. In 2027, with a PE of 50, we get a stock price of 41.90, market cap almost 5.5 trillion. 2028, with a PE of 40, we get 42.94 bucks per share, almost reaching a market cap of almost 6 trillion. In 2029, with a PE of 35, we get a stock price of 48.15, almost a 7 trillion market cap. And in 2023, with a PE of 30, that's right, 30, which I don't think by 2030 Tesla will be trading at a 30 PE, and I'll tell you guys why in a bit. But with a 30 PE, we get a stock price of 48.84 bucks per share with a market cap over 7 trillion, which is crazy. And this is the bear case, by the way, in my opinion. Now, the reason why I say that 30 PE by 2030 is not really realistic is, well, first of all, this is only taking into effect of vehicles sold and FSD. That's it. Nothing to do with anything else. But let's take Amazon, for example. 10 years ago, they were at a PE of almost 13 to 1400 PE, which is just absolutely crazy. Right now, 10 years later, their PE is at 60. So they're still high growth. And by 2030, Tesla is also going to be high growth. Whether it's their vehicles or their Tesla bots or the robo-taxis or other stuff that they're doing, energy, whatever it is, Tesla is going to continue being a high growth company for a very long time. We'll play around with that PE at the end, but let's move on to the bull case. Now for the bull case, I kept 2022 the same, 1.4 million vehicles sold. But in 2023, I think there's going to be a monstrous comeback and they're going to do 60% in growth. I mean, that's just insane, but I do believe that in 2023, if there's no restrictions and the other factories do come, it's gonna be very nice. And with the 60% growth, we get 2.4 million vehicles sold in 2023. Then I did 50% growth for 2024, which would give us a 3.36 million vehicles sold, and then another 50% growth for 2025, which would give it a bit over 5 million vehicles sold. 40% growth in 2026, over 7 million vehicles sold. Another 40% in 2027, almost 10 million vehicles. 2028, another 40%, which would almost give us a 14 million vehicles sold in 2028. Sheesh. 2029, I reduced it down to 30, which would give us almost an 18 million vehicles sold in that year alone. And then 2030, I kept it at 30 as well, which would give us almost over 23 million vehicles sold in 2023 in just 1 year alone, which is absolutely insane. Now, what's also insane is the fact that total revenue just hit over 1 trillion. I mean, that's just insane. And the net income is over $300 billion. And that's only including FSD and vehicles sold. That's it. Like, geez, I have to keep stressing that because that's just insane. Now, moving on to the stock price, and this is going to be interesting. The PE, I'm going to keep the same as I did in the bear case because I really do believe these PEs are realistic and a bit conservative, a bit more conservative really at the end of the later years. And again, in 2022, I kept it at 100 PE, keeping that 1125 as the average to be safe. 2023 with a PE of 90, we get almost 1900 bucks per share, exceeding 2 trillion market cap in 2023. So literally next year. 2024 with a PE of 80, we get 2,700 bucks per share, over 3 trillion in market cap. 2025 with a PE of 70, we get 3,277 bucks per share, almost a 4 trillion in market cap. 2026 with a PE of 60, we get a stock price of 41.67 with a market cap over 5 trillion. 2027 we get a PE of 50 with a stock price almost hitting 5,000 bucks per share with a market cap exceeding 6 trillion. This is absolutely crazy. Every year they're getting a trillion. In 2028 with a market cap of 40, we get a stock price of 5,300 bucks per share, almost 5,300 with a market cap over 7 trillion. In 2029 with a PE of 35, we get almost 6,000 bucks per share. And in 2030 with a PE of 30, we get a stock price of 6,512, market cap exceeding, almost 9.5 trillion, which is absolutely crazy. Now, obviously, we're not going to be seeing incremental growth like this every single year. The stock market doesn't really work in a linear fashion. But if Tesla hits these numbers and gets these revenues and net incomes, we can expect the stock prices to be in this range. Kind of like now, as we see, the stock price with 100 PE, it's around 1,100 bucks. Stock price right now is 700 because everyone is in extreme fear. Everyone is fearful right now. Now let's go ahead and play with the stock for a little bit. We said 50 PE. Let's look at the 50 PE for the bear case. That brings the stock price to 8,000 bucks per share in the bear case. That's just absolutely insane. In the bull case with the PE of 50, that's like 1,100 bucks, 1,100,000 bucks per share. That's just absolutely insane. But again, keeping things conservative, putting it back to 30, I guess we can keep things very conservative and safe. Another thing that I want to play around with is, let's say FSD doesn't work, which, by the way, if Tesla can prove that having full self-driving vehicles that can drive by themselves on the road that's safer than humans, you can bet your ass that FSD is going to happen. But let's just say something goes wrong and Tesla loses their license and they can never do it again, and that's it. FSD doesn't exist at all. It's finished. It's done. Finito. Well, first of all, I don't think that's ever going to happen. I think FSD is going to become a big reality in our lifetime. But let's just say for whatever chance it doesn't happen, it just poofs, it's gone, it doesn't work. Governments don't like it, they won't regulate it, it's not as safe as humans driving. Well, this is gonna be the stock price. So in the bear case, let's go ahead and remove the FSD from 2022 to 2030. We get a stock price of 3,500 bucks per share, almost 3,600 bucks per share, with a market cap exceeding 5 trillion. So literally in the bear case, if FSD doesn't work and if Tesla insurance isn't included, if Tesla bot isn't there, robotaxi, well, if FSD doesn't work, there is no robotaxi. But with solar panels as well, if these are not included and if they just solely focus on cars, by 2030, 3,600 bucks per share, a 4x from now. In the bull case, we get a stock price of 47.69 and a market cap of over 7 trillion, or just at 7 trillion. So the absolute bearish case by 2030 is 3,577 bucks per share, and the absolute bullish case by 2030 is 6,512. And again, guys, this is only with a 30 PE. I believe a 30 PE is just being very conservative. Comment down below. Let me know what you guys think. Do you guys think this is realistic? Am I lowballing it? Is this highballing it? Let me know what you guys think. I'm curious to know what your thoughts are. So you see, guys, it's literally an opportunity of a lifetime, and I get it. It doesn't seem like it right now. It seems like investing right now in the stock market is a bad choice, but you have to remember, these are the times where you could pick up high quality stocks on the cheap. And as the saying goes, be greedy when others are fearful and be fearful when others are greedy. And literally, we just saw how greedy everyone and everything was just 6 months ago. And now everyone is fearful. So to recap, no, Tesla is not going bankrupt. No, Tesla is not downsizing. And no, Ford is not catching up to Tesla anytime soon. Just relax, do some research, do some DD, make your own analysis into the matter, and don't give into the media. After all, the media only reports on doom and gloom news, so why would you want to give into that? I personally picked up as many shares as I could on Friday, making me even more all in into Tesla. Although it could go lower, I don't time the market at all because it's stressful, a waste of time, and literally like sitting behind a screen all day to figure out when the bottom is going to be, timing the market, just really stressful, and I'm not down for that. I'm not down. So the best thing to do really is to dollar cost average down and hold long term in the companies that you believe in, like Tesla. But is it really time to buy Tesla stock now, or should you guys actually wait a bit because, Q2 is gonna be very bad? Well, check out this video here. You're gonna enjoy it, and that question is gonna be answered. So check it out. You'll enjoy it. You'll find value, and man, don't forget to subscribe, and I shall see you guys in the next video. See ya. Oh, and one more thing. Ain't no resting in peace, man. We're going to the moon.